Okay. So to continue with, there are three methods of dividing the splitting the semi-variable costs. That is into the variable component and the fixed component. It has to be split into two parts. Why? Why is the question? So in case if the costs have to be estimated for the future, in case of planning and all. So for that reason, we have to have this cost split into the variable component and the fixed component. So all these three methods help us to understand what would be the semi-variable cost for the future. So there is an example given here. So I will help you out to understand how do we work out. There is an example. So I've copied this and then I've pasted in an Excel file. Along with you, I will also work it out. So then you can understand how do we do that. See, a set of data is given. For example, there are various activity levels and the total costs are given. So the same example I have copied here. Let's work out how do we solve this particular question. See, from the set of data, the name itself says that it is high-low method. Select a high activity level, select a low activity level. We need to select these two activity levels. After we select high activity level, low activity level, then um, we proceed further to split them into variable component and fixed component. Let's present this one, this example. The first activity, uh, see the two variables which are mentioned are activity level and the other one is total cost. So first let's mention from among the set of data, see when activity level is 10,000, total cost is 10,000, 12,500, 12,000. So like that, then 7,500, 18,750, 22,500. So what we need to do is, um, so what we need to do is we have to first identify the high level and the low level. So uh, first mention the high level. High is for 22,500 units and the costs are 20,000. Then mention what's the low level. The low level is 7,500 and the cost is 8,000. So this is what we have. So what does this indicate? It indicates that when the activity level moved from 7,500 to 22,500, the cost also moved from 8,000 to 20,000. This is basically a semi-variable cost. If it is a semi-variable cost, it is partly fixed and partly variable. See, when the activity level moved from 7,500 to 22,500, the cost also has changed from 8,000. When it moved from 7,500 to 22,500, cost moved from 8,000 to 20,000. So what we need to do is first we have to find out what is the difference. The difference is all on account of the variable component. So difference is 22,500 minus 7,500. So here also we see that it is, so if it is changing, it would change on account of variable cost, variable component. So variable cost is 12,000 for a change of activity at the rate at 15,000. So when the number of units changed by 15,000, the cost has changed by 12,000. So what is variable cost per unit? So we need to find out what is variable cost variable cost per unit is equal to 12,000 divided by 15,000. So which is equal to, so we see it is 0.8 per unit. So we were able to identify what is the variable component, but then we also have to find out what is the fixed component which is included in that. So select any activity level. So we can go with any activity level. Let's say that at 7,500 units, what's the total cost? So the total cost, we see the total cost is 8,000. So first from this deduct variable cost. How much is variable cost? Variable cost is 7,500 into each unit at the rate of 0.8. So that we get it as 7,500 into 0.8. Then the resultant figure is fixed cost. 2,000. So does that work out with any other activity level? The other activity level? Yes, it works out with the other activity level also. So let's try that. See, the other activity level is 22,500. So 22,500, the total cost is 20,000. Variable cost would be 22,500 into 0.8. So the fixed cost is 2,000. So do you see that the change? The fixed cost is a cost which remains fixed. So we can um, separate that and then identify. So I'm taking you back to the presentation. So this is how we were able to calculate. The point is, whatever is the change in the cost and change in the output is taken, and then we find out what is the variable cost per unit. Once variable cost per unit is known, we can find out what is the total fixed cost. Now, what is this? What is this concept all about? Once we understand how do we split that, in future when the planning is taken up at any activity level, we will be able to uh, estimate what would be the cost, because if it is a fixed cost, there's nothing to worry about it. It would be the same even for future period, any other activity level also within the relevant range, it would remain the same. So at the time of forecasting, there would be no issue. Similarly, with variable cost also, it varies proportionately. So there is no issue with the variable cost also. Proportionately, we keep changing the variable cost. For 1 unit, if it is $2, then 2 units, 400 units, 100 into 2,000 units, 1,000 into 2. So it's easy to estimate the variable cost also. But in case of semi-variable cost, it is not that simple because it's partly fixed and partly variable. So when it is partly fixed and partly variable, we need to separate the variable component and the fixed component and use it for estimating the cost for the future. So that's the important thing. We have to estimate that for the future period of time. Um, Next method. So there are three methods which are mentioned to us. One is the high-low method, scattergraph method, and regression analysis. These three techniques are used to estimate the semi-variable cost. So what's regression? What's scattergraph? Scattergraph is about the plotting the past data on the graph. So the historical data, take the historical data, all available data is plotted on the graph. So um, see, these are the data points. Do you see the X mark which is there? So in that pattern, the data points are first plotted on the graph. See, on the x-axis we see the output, on the y-axis we see the cost. So once the past data is plotted on the graph, we see there is a pattern which is developed. So we see that the points are like this. But then whatever is the way, we see that that is in the increasing trend. It is perfectly not in a straight line, but it is in an increasing trend. When it is an increasing trend covering most of the data points, when there is a line which is drawn, we see, because it is an increasing trend or decreasing trend or whatever is the trend, once it is observed, including many data points, when a line is fitted, a trend line is fitted, uh, that becomes the trend line of the data. Let's say it is until 400 units, it is this much. Let's say if it has to be extended up to 600 units. So let's say that what is the total cost at 600 units is what has to be calculated. At somewhere here it is 600 units. How do they estimate that? What is that? The simple thing what is done is, by now there is a trend line which is fitted considering most of the data points. So this line is simply extended into future. There is a pattern they have observed. It is upward rising. When it is upward rising and it has come till the maximum point 400 units, so in future if they take up 600 units for some activity level, so for that activity level what would be the cost can be estimated by just extending the trend line. That is the point of scatter graph method. All available data is plotted on a graph. Line of best fit drawn by eye. It is just understanding about what are how is the data which is scattered on the graph. Um, a direction is understood, upward, rising, downward, or whatever is that the direction is understood. So basically, by understanding, it says that by line of best fit drawn by eye, by looking at that, if whatever is the understanding of the user, based on that, if a line is fitted, that line in future can be extended to estimate the future data, future activity level. So fixed element is equal to vertical axis intercept. Then variable element is equal to gradient of the line. What does it mean? Now here it says that fixed cost, whatever is the fixed cost, this is at 200. So from zero number of units until the maximum capacity, so it would be the same. So whatever is the maximum capacity until there, whatever is the amount initially incurred at zero number of units, it would be the same until it reaches the maximum capacity level. So then variable cost per unit is which changes per unit basis. So already we have learned that. So scatter graph, without applying too much of mathematical equations, we can understand or we can forecast the data for the future just by extending the trend line to the future. So any other activity level. That is about the scatter graph method. Regression analysis. Regression analysis is about the study about two variables, one dependent variable, another one an independent variable. So is there a relationship between these two is measured by a technique called as correlation. First correlation is taken into consideration, and then whether there is a relationship which exists between two variables is first studied. That is a dependent variable and independent variable. So now in case of accounting, with the help of regression analysis, we can define the relationship of the semi-variable cost being dependent on the activity level or the number of units. So that way it can be estimated. So that is given, the linear relationship is defined by an equation called as y is equal to a plus bx. So with the help of that equation, it is possible to estimate the semi-variable cost. So when we see that the equation is given as y is equal to a plus bx, y y is dependent on x. Unless and until we know the value of x, y value cannot be calculated. On the other hand, x is an independent variable. It is not dependent on any other thing. So now we have this equation which is given as y is equal to a plus bx. This a plus bx plus, so plus is connecting two variables. One is a, The other one is bx. So a is a constant, b is also a constant, x is a variable. So how do we define the semi-variable cost? So A is not connected to any other thing. It is independent. It is a constant. So we take A to be as the fixed cost. So Y is a semi-variable cost, which is partly fixed and partly variable. So one part of it is fixed in nature. It is not dependent on any activity level. So fixed in nature, another part of it is variable in nature. So the variable component, what we see, keeps changing with the activity level. So this equation can be used to estimate the semi-variable cost. So the first part of it, A, is fixed cost. The second part of it, BX, is variable cost, because variable cost is a cost which varies proportionately with the output. So X can be taken as output or number of units, and BX is variable cost per unit multiplied into number of units gives us what is variable cost. So BX. So once if we understand what is the total fixed cost, what is the variable cost per unit for any activity level, it becomes possible to know what is the total semi-variable cost. So this is about regression analysis. Y is equal to a dependent variable on X. Only when X is known, it becomes possible to know what is the total cost. A is an intercept of a y-axis, B is a gradient of the line. Okay, it starts from this particular point. Okay, so when we look into this equation, it is partly fixed and partly variable. That's the concept. How do we do? How do we know what are the values of A and B? So statistical methods are available to find out what the values of A and B. So B is equal to n into sigma xy minus sigma x into sigma y by n sigma x square minus n sigma x whole sorry, just sigma x whole square. We find out the value of b is equal to, where n is equal to number of pairs of data, a is equal to y bar minus b x bar. See, if we are working out a numerical question, I will be able to make you work out one question in the class. So any numerical exercises, if we have to take it up, because it's only 8 hours class, I don't know how many questions I can solve. So, but if time permits, we will definitely take up 1 or 2 questions about each method and then work it out. Okay, there is an example given here, luckily. Let's take it up and then work it out in the Excel sheet. So I will carry this question there. I will also work it out, but the definitions part of it also, I'll copy that and get. Okay, this is the question. There are two variables. One is production volume and production cost. Volume is the activity level, cost is given production cost. So with the help of regression analysis, how do we do that? So one variable, first variable production is variable X, and then production cost is variable Y. So the formula for A and B, they are given as n into sigma xy minus sigma x sigma y by n sigma x square. So let's we will also work it out. Of course, the solution is there on the screen, but let's put an effort to understand and work out how it works out. So we have first x, variable x, and then variable y. Whatever is the data, along with me, you also please work out. 9, then we have 10, then we have 9.7, 10.5, 11, 11.5, and then variable y. So there are two variables, x and y. Um, see, we are using the equation y is equal to a plus bx. So a and b are constants, but how do we calculate the value of a and b? There are equations given. A is equal to value is given, b is also there's a value given. So let's take it up and then work out the question. So B says B is equal to n sigma xy minus sigma x sigma y. So we need to first find out what is x into y, then only sigma xy, then n sigma xy. So first let's find out what is x into y, x and y. Find out the total x x into y, sigma xy. Okay. After that, sigma x into sigma y. So find out the totals of sigma x and sigma y. That also has to be calculated. After then we need to find out what is x square, because the denominator has sigma x square and sigma x. Um, find out what is x square. Okay. So these are all sigmas. So I'll just highlight it and put it in bold. The calculation of a b is equal to, the numerator has n. What is n? The number of items. 1, 2, 3, 4, 5, 6. 6 items are there. So n is 6. 6. N is equal to 6. Then sigma xy. So sigma xy is total xy. Total xy is equal to x into y. Um, 16,751. Total of x multiplied by total of y. So that is sigma x into sigma y will be, we will have it as 61.7 into 1620. then n sigma x square is 6 into, so that will be 6 into 638.6. Okay, so you have understood what they are. They just substitute them, substitute in the equation, and then find out the value of b. B is equal to all these things are given. So after b is calculated, what a has to be calculated. A is equal to sigma y minus b sigma x. So uh, sigma y and sigma x also has to be calculated. So mean of y is equal to, what is the formula for mean of y? The sum total of y, 1620, divided by 6 items are there. Then we also need to find out what is mean of x is equal to, the sum total of x is given as 61.7. 61.7 divided by 6. So whatever is the value, just calculate that. Okay, then we also can find out what is the value of b, a, value of b and then value of a. Okay, is that clear? So we'll go back to the presentation and then take the topics further. Then in connection to regression analysis is correlation. First step is we find out whether two variables are related to each other, correlated, related to each other is what has to be understood. So when the relationship is calculated, we get to understand whether there is a positive relationship or negative relationship, or there is no relationship. That also can be understood. So the first example, the relationship is explained by way of various graphs. The first example is a perfect positive um, linear. So when there is a change in the variable x, we see that there is a change in the variable y in the same direction. When x is increasing, y also is increasing. So the relationship is defined here as um, perfect positive linear. But if it is the other way around, when the variable x increases, the variable y is decreasing. So that's perfect negative linear. If it is not a straight line, if there is a particular pattern, we call that to be as high positive. Then similarly, when there is a fall, there is a pattern, we call that to be as negative, moderate negative, no correlation. No correlation is a situation where there is no trend at all. Like when these points are connected, we see that there is a straight line existing there. But when there is no such pattern, either to increase or decreasing, Okay, correlation is defined by a variable R. R lies between the values -1 and +1. So when it is +1, R is equal to +1 denotes perfect positive linear correlation. If it is -1, so it lies between -1 and +1. So if it is towards -1, then we see that it is perfect negative linear correlation. If R is equal to 0, which means that there is no relationship which exists between two variables. So the R is equal to 0. The closer to +1 or -1, the stronger the correlation. So if the values are closer to either of them, it could be strong negative or strong positive. Then we have the coefficient of determination R square gives the proportion of changes in Y, which can be explained by changes in X. So when R is calculated and that R is, see here in this example for XYZ, R square is equal to 0.89 square, which is 0.79. So that is closer to 1. So 79% of the changes in production cost can be explained by changes in production volume. So there is a relationship. It is strong because it's closer to 1. And whenever there is change in one variable, that will result in a change in the other variable also. Any doubts still here? Because the next topic what we're going to do is relevant cost. This is the first time I'm doing 8-hour session. This is vast content. I will put in my effort to finish that in as early as possible. I'll take you through the examination kit questions and then we'll take up at least one question per model. Try to understand. Any doubt you have to please raise the doubt and then get the doubts clarified. I think I'm assuming all second year students must have left because very recently they have learned all these concepts. So it's absolutely of no, there's nothing that they would learn anything new here. So you also can remember that whatever is done in BA2 will again repeat in P1 to some extent P2 also. So P1 is basically built on BA2. So don't just learn that here and then forget about it. Please remember all the content so that when you write the exam, you should clear there. Then in that case, if there's no doubt, let's move forward. The next topic what we have is relevant cost. Are you able to follow? Please someone respond. Are you able to follow? No one to respond. No doubts. Um, the next topic is relevant cost. So from the beginning of this session, we've learned about various types of cost. So now, not all costs are relevant. Now, whenever we talk about relevance, relevant cost, that relates to relevant for decision making. So if they are useful for decision making or not. So all costs which change because of a decision taken, we call them to be as relevant cost. If they do not change, we call them to be as irrelevant cost. What are relevant and what are irrelevant? Broad classification is anything which varies with the decision. So basically, we understand that variable cost varies because of a decision. When the activity level changes on account of that, if the cost changes, we call that to be as a relevant cost. So what are relevant costs? We see that incremental costs and revenue which keep changing with the activity level. So they are nothing but the variable costs. So that is relevant for decision making. Relevance is all about whether there is an impact on the cost because of a decision taken related to the activity level. Then future costs and revenues, any cash flow, any opportunity cost. So these are all relevant in nature. What is irrelevant? See, there are certain things which are given. That is, any activity level, any decision to take up any activity level, if the costs do not change, if they do not vary, then we call them such costs to be as irrelevant costs or not relevant costs. There are few examples which are given. Sunk cost. Sunk cost is anything which is already sunk, which is already incurred. So technically speaking, that is a historical cost. So all historical costs, we call them to be as irrelevant costs. They are already incurred. Can anything be done to undo those costs? It cannot be undone. So we cannot undo those costs. Historically, they are already incurred. Nothing can be done to change that amount. So that is a irrelevant cost. Then there are sometimes there are certain commitments which are entered into, agreed upon, so those things also cannot be changed. For example, if they have entered into a lease agreement, so as long as the lease period lasts, um, the cost of paying the lease amount also would be there. Now suddenly if the manager wants to alter that amount, is it possible? No. There is already an agreement. There is agreement from both the parties that um, one party would allow them to use the resources, another party would continue to pay the lease amount for a specified period of time. So that is a commitment made in the past. So based on the commitment, now nothing can be done. Similar thing is depreciation. At the time of purchase of asset, whatever is the method of depreciation which is adopted, and the amount of depreciation will be calculated and charged to income statement till the end of the life of the asset. Now suddenly nothing can be done. Okay. Then non-cash items are irrelevant for decision making. Now, how much cash they would have to spend and what are the changes that will be taken into consideration. Non-cash items, net book values, the value which stands in the books of accounts. But let's say asset is purchased and it's being used, so it has a market value. I'm really sorry. It has a book value. So book value, it is a historical value recorded in the books of accounts. So it's irrelevant for decision making. Notional costs are they are not real cost, but they are shown in the books of accounts because they are according to the principles of accounting. Like rent paid to the rent paid to the owner. It's premises of the owner, but technically, do we see such a thing happening, a transaction that owner comes and collects amount from business? We do not see such things happening. But still, because they are allowed to be recorded as per the principles of accounting, that is, owner and business are two different entities. So any services provided by the owner to the business, owner is supposed to receive salary, or a owner is supposed to receive interest on capital, owner is supposed to receive rent on his own premises, things like that. They are expenses, but they are not real expenses which are incurred. They are notional. It is based on an idea. um, so those things are also not relevant for decision making. So relevant cost and irrelevant cost, we have to have an understanding about what these things are. The next topic here is about overhead cost. What are overhead cost and all we have to understand. Then talk about what is the way in which overheads are allocated. There are methods given here. So we will also take up those methods and then work out. Okay. Now, if I start explaining the overhead concept, we would not have sufficient time to take up this topic. So tomorrow we'll meet. But what is the meaning of overhead cost? Overhead cost is when any amount of cost is not identified with the cost object, we call that to be as an indirect cost or overhead cost. All indirect costs are um, called as overheads. So how do we account for these overheads? There is no identifiability that we can charge it to the product or service. They are incurred. Okay, they are incurred, and that has to be accounted. So, what are the steps which are available to account these overhead costs or indirect costs in the books of accounts? Okay, we'll wind up the class here and then meet tomorrow at 3 p.m. Okay.